Hello guys. So our next topic is super profit method. So first of all, what is this super profit? So suppose you are starting a business. So at the time of starting, you will think that after doing this work, after manufacturing whatever product you are manufacturing and selling it into the market, normally you will earn something. Suppose 70,000 as your profit. Means every firm is at least getting this amount of profit, and you are also thinking that when I will start my business, I will also earn this much amount of profit. So this will be called as normal profit. Means the profit which is normally earned by all the businessmen of the same industry. Means suppose if you are like if we talk about Colgate, Pepsodent, Dabur, so they all are making toothpastes. So suppose they all are getting 70,000. It means 70,000 is the normal profit which they all are gaining. So this is our normal profit. But after, this is our assumption that at least we will earn this much amount of profit. But after doing the business, suppose you are getting more than this normal profit. Suppose you are getting more than this normal profit. Suppose you earn 90,000. So this will be called as your average profit of that individual year. So this 90,000 will be called as your एवरेज प्रॉफिट ऑफ दैट इंडिविजुअल ईयर्स. मीन्स आपने जब बिजनेस स्टार्ट किया तो योर थिंकिंग वॉज दैट एवरी वन इज गेटिंग दिस अमाउंट ऑफ प्रॉफिट, सो दिस इज द नॉर्मल प्रॉफिट. बट आफ्टर डूइंग द बिजनेस, सपोज यू गेट 90,000, so this will be your average profit. And what we are discussing super profit. So it means over and above normal profit. What is your normal profit? 70,000. So how much extra you are earning from this 70,000? So you are getting 20,000 extra. So this 20,000 will be called as super profit. So what super profit means? Over and above the normal profit which a firm is earning is called super profit. Means firm अपने normal profit से जितना extra earn करती है, that will be the super profit of that firm. So under this method, how to calculate the goodwill, I hope super profit is clear to you. So how we will calculate the goodwill, let's discuss. So what are the steps we have to follow to calculate the goodwill under super profit method? So first, here also you have to calculate your average profit, as we are calculating it in average profit method. So you know how to calculate it. After this, you have to calculate the normal profit. What you have to calculate? Normal profit, which we have discussed here. Then after normal profit firm, you have to calculate the super profit, which I told you that super profit is what? Over and above the normal profit which a firm is earning, which means normal and average ka difference is your super profit. So how you will get it? Average profit minus normal profit. So this will be your super profit. And last step, you have to calculate your goodwill. So for it, what you have to do? Super profit multiply by number of purchase year. So how to calculate this normal profit? Average profit though you already know, super profit and goodwill I told you. So how to calculate this normal profit? Normal profit means what? Ki whatever amount a firm had invested, that is called capital invested or capital employed. So every firm is expecting some minimum amount of rate of return. Every firm is expecting a minimum rate of return. So that rate upon 100 rate of return, whatever they are expecting. So by using this formula, you will get your normal profit. What is normal profit? Capital employed means whatever capital invested by the firm into rate upon 100. Rate of return means on this capital invested, capital employed, everyone wants some return. So whatever return they are expecting, that rate upon 100. So this will be the normal profit. Capital employed is also called, for your information, capital employed is also called capital assets, capital invested and net assets. And how to calculate this net assets? So for calculating net assets, we can say total assets minus outside liabilities. What we have to do? Total assets minus outsider liabilities. This total assets include except fictitious assets. This total asset doesn't include fictitious assets and goodwill. So for calculating net asset, these are the formulas which you can apply. And capital employed, in this chapter we talk about, so it is already given to you in 2 or 3 questions. You have to calculate this capital employed by applying this formula. Otherwise there is a, you can say, a wide concept about this capital employed, in which we will learn how to calculate it. So this thing you will learn in second part of your book, analysis of financial statement, in which there is a chapter accounting ratio. There you will have to understand it completely. So till the time you can use only this formula. So moving towards the questions. So here question number 21 of this first question of this method. Average profit earned by a firm is rupee 80,000, which means this is average profit, which includes undervaluation of stock of rupee 8,000. Under this 80,000 there is stock which is undervalued. Undervalued means less amount. So if you have recorded your asset at less amount, which means your profit will also be less. So for getting actual average profit, what you have to do? You have to add this profit. What you have to do? You have to add this profit. So your actual average profit in this question number 21, your actual average profit will become 80,000 plus 8,000. This is the undervalued value of stock. So it becomes 88,000 is your actual average profit. Apart from this, capital invested in the business is rupee 8 lakh, and the normal rate of return which a firm is expecting is 8%. So what I told you, you have to use these steps. First you have to calculate average profit, which is already given in question. We have recorded also 88,000. Then we have to then we have to calculate normal profit. And I told you, for normal profit what we have to do? Capital employed into rate upon 100. So calculate it. Normal profit. So for it, capital employed. So what is given? Capital employed, also called capital invested in the business, that is rupee 8 lakh. 8 lakh is capital employed into rate is 8%. So 8 lakh into 8 upon 100. So this will be your normal profit. So it becomes 64,000. So your normal profit is 64. And then next step which I told you is super profit. So for super profit, average profit minus normal profit. This thing you have to follow. So your super profit in this case will be, average profit is 88, normal is 64. So 88,000 minus 64,000, and write down the formula also. So it will be 24,000. So super profit is 24,000. Next step is to calculate goodwill of the firm. So for which I told you, super profit multiply by number of purchase year. So what is the amount of super profit we had calculated? It is 24,000, and number of purchase year is given in question. Calculate goodwill of firm on the basis of 7 times the super profit. 7 times the super profit. So super profit is 24 and 7 times. So multiply it. 7 4 is 28. So it will be 1,68,000. I hope it is clear to you. Moving towards the next question. So Gupta and Bose had a firm in which they had invested rupee 50,000. So invested means capital employed or capital invested. So this is capital employed, or you can say capital invested. On an average, the profit were rupee 16,000. So this is your average profit. Normal rate of return is 15%. So rate of return is 15%. Goodwill is to be valued at 4-year purchase of the profit in excess of profit, or at the rate 50% of money invested. Calculate the value of goodwill. So I hope you can solve it easily. Moving towards the next one. The total capital of the of the firm of Sakshi, Mehak and Megha is rupee 1 lakh, and the market rate of return is 15%. So total capital means capital employed or capital invested, and rate of return is 15%. And the net profit for the last 3 years were 30,000, 36,000 and 42,000. So in this question, in the previous two questions, average profit is already given, but in this question, net profit of past 3 years is given. So you have to calculate the average profit first. Then goodwill is to be valued at 2 years purchase of the last 3 years super profit. Means you have to calculate super profit on the basis of 3 years, and then you have to multiply that super profit by 2, so that you will get your goodwill of the firm. I hope it is clear. Now moving towards next question. Rakesh and Ashok earned a profit of rupee 5,000. So this is your net profit, average profit. They employed capital. They employed capital of rupee 25,000 in the firm, which means this is the capital employed. It is expected that the normal rate of return is 15% of the capital. Means how much return they will get? So they will get 15% of this amount. So this will be the normal rate. Normal rate means normal profit. Calculate amount of goodwill is calculated at 3-year purchase of super profit. So you can also solve it. Next one, average net profit expected in future by XYZ firm is 36,000 per year. Average capital employed in the business by the firm is rupee 2 lakh. So this is the net profit, average net profit, or you can say average profit. Average capital employed is 2 lakh. Normal rate of return is 10%. Apart from this, there is one extra information, that is remuneration, as we have solved in case of weighted average profit. So what is remuneration? So remuneration is given at the rate 6,000 per annum. What the line says, remuneration of the partners, which means remuneration is given to both the partners. So check, is there information about how many partners are there? So there is no such kind of information. So it means 6,000 you will take as a salary. Calculate the value of goodwill on the basis of 2 years purchase of super profit. So same here, you have to deduct this 6,000 from your average net profit. So you will get your actual average profit from this 36. First you have to deduct your 6,000, then you will get your actual average profit. Then calculate 10% of 2 lakh, that will be 20,000. 30 minus 20, 10, and 10 into 2, that will be 20,000 as your goodwill of the firm. So similarly you can solve the remaining questions also. So moving towards question number 30, and these two questions we will solve after the completion of this topic. So what is question number 30 says? A business earned an average profit of rupee 8 lakh during the last few years. So average profit is 8 lakh. Normal rate of profit in the similar type of business is 10%. So rate of return is 10%. So total value of assets and liabilities of the business were 22 lakh and 5 lakh 60,000. What it means? So it means here you have to apply this formula for calculating net asset, that is total asset minus outsider liabilities, or you can say outside liability. This total asset excludes fictitious assets, goodwill, and one thing also, that is investment. So these three things are not the part of total assets. So how you will get your net asset in this question? So 22 lakh is your total assets and total outside liability is 560. So 22 minus 560 will be 16 lakh 40,000. That will be your capital employed, and you have to calculate 10% to get your normal profit. And average is given, so average minus normal, and number of purchase year is 2.5 year, which means 2.5. so you can solve it. Next 31 question. Capital of the firm of Sharma and Verma is 2 lakh and the market rate of return is 15%. Means capital employed and rate of return is 15%. So you will get the normal profit from these two figures. Annual salary of two partners. Partners means Sharma and Verma both will get 12,000 each. So total salary would become in this case 24,000. Profit of the last 3 years were 60, 72 and 84,000. So these are the profit. Just add them and divide by 3. You will get your average profit. But that will be your average profit before salary. And you have to deduct the salary also. So what will be the salary? Salary would become 24,000 because 12,000 each. And we have two partners, Sharma and Verma. So the salary of both the partner will be 24. So from average profit deduct this 24,000. So then you will get your actual average profit. Then 20 to 15% of 2 lakh will be 30,000. So that will be your normal. So average minus normal, you will get your super profit and multiply that by 2 to get your goodwill. Next, Supreet and Shubham are equal partner. They decide to admit Akriti for 1/3 share for the purpose of admission of Akriti. Goodwill of the firm is to be valued at 4 years. Means goodwill will be calculated on the basis of 4 years purchase of super profit. Means 4 times of super profit will be your goodwill. Average capital employed is 1,50,000. Rate of return is 15% and average profit is 40. So 15% of 1,50,000 will be your normal profit. Average is given, average minus normal, super into 4 will be your goodwill. Moving towards the next question, 33. On 1st April 2019, an existing firm had asset rupees 75,000 including cash 5,000. So cash is also an asset. So it means total assets are 75,000. Its creditor 5,000, which means liability. Creditors are outsider liability. So 75 minus 5, that will be the net asset in this case. So 70,000 will be your net asset, which means capital employed. The firm had a reserve of 10,000 while partners capital account show balance of 60,000. So they are of no use. Means if you will apply liability approach for calculating capital employed, then you have to use it, otherwise leave it. So I didn't tell you about these approaches, so till the time leave it. So normal rate of return is 20%. So capital employed will be 75 minus 5, 70,000, and 20% of 70,000 will be your normal profit. So 20% of 70,000 will be 14,000 is your normal profit. So what we get from this question number 33. So we get the normal profit. How we get 20% of 70,000, 20% of 70,000. So it would be 14,000 as our normal profit. And question says that goodwill of the firm is valued at rupee 24,000. Means in this question value of it goodwill is already given, that is 24,000 at 4 years purchase of super profit, which is 4 times of super profit. Means this 24,000 is 4 times of super profit. What we have to find average profit. In this question we have to find average profit. So remember, what is the formula for calculating goodwill under super profit method? So this is goodwill equal to super profit multiplied by number of purchase year. So goodwill is 24,000 and number of purchase year is 4. So what will be super profit in this case? So super profit will be 24 divided by 4, that means 6,000 will be the super profit. And what is the formula for calculating super profit? That is average profit minus normal profit. So average minus normal. So we don't know about the average, but we have super profit and normal profit also, minus 14,000. So minus will turn onto this side, so it becomes 20,000 as our average profit. I hope it is clear to you. Now moving towards the two question which we left. Question number 28. So what is question number 28 says, ideal marketing earned an average profit of rupee 4 lakh during the last 5 years. So average profit is given 4 lakh. Normal rate of return is 10%. And balance sheet of the firm as at 31st March was as follows. Balance sheet is given. And what is the information after balance sheet? Calculate the value of goodwill. If it is valued at 3-year purchase of super profit, means we have to do 3 times of super profit to get the value of goodwill. So in this question we have to, capital employed is not given, and I told you that we have two approaches to calculate capital employed, that is liability approach and asset approach, but I didn't explain that to you. So here I write something that for net asset, what formula you can use? Total asset minus outside liability. But this total asset excludes non-trade investment. Which investment? Non-trade, fictitious assets and goodwill. Means total assets excludes non-trade investment, fictitious assets and goodwill. So and outsider liability. So in this question also you have to follow the same concept. Total asset is 23 lakh, as it is already given in hint also. Total asset is 23 lakh. From this you have to minus the investment, that is 1 lakh, as it is mentioned in hint also. Being non-trade it is mentioned, minus fictitious assets. So there is no fictitious assets given here. Minus outsider liability. So outsider liability here is creditors, bills payable, outstanding expense. Creditor, bill payable, outstanding expense. These all 3 points are outstanding liabilities, outside liability, sorry. So you have to deduct these balances also, so you will get your normal profit, and then calculate 10% of your normal profit. You will get, sorry, 10% of your capital employed, so you will get your normal profit. Then average is given, normal you will get, so you can calculate super profit and goodwill also. Moving towards the next question. Varuna and Karuna are partners for equal share. They admit Lata into partnership for 1/4 share. It was agreed to value goodwill of the firm at 4-year purchase of super profit. Normal rate of return is 15%. Means goodwill will be calculated on the basis of 4 times of super profit, and normal rate of return is 15% of capital employed. Okay, and apart from this, average profit is 4 lakh. So again we have to calculate the capital employed. Again we will follow the same formula, this one. So total assets are 19,50,000, and deferred revenue expenditures are example of fictitious assets. So what fictitious asset we have? Advertisement suspense, so we have to deduct it. Look about the investment. So investment is given, but here it is clearly mentioned that it is for trade purpose, and what we have mentioned in formula that we have to use non-trade investment. So we can't deduct it this time. This time we will not deduct it because it is for trade purpose. So 1950 minus 50,000 as fictitious assets minus outsider liabilities. So for outsider liabilities we have 3 points, that is creditor, outstanding expense and advance from customer. So total becomes 4 lakh. So 1950 minus 50 minus 4 lakh, it will be 15 lakh as your capital employed. So how much percent? 15%. So 15% of 15 lakh will be 2,25,000. 4 minus 225, 175 will be your average, sorry, super profit. So I hope you can solve it. So rest of the question we will solve in the next video, that is super profit with when past adjustment and capitalization method. Till the time, try the questions as much as you can solve. Thank you.